So we are discussing a concept called cost versus expenditure because our main subject is cost accounting and management accounting. So in this regard, let me explain what is the difference between cost versus expenditure. One minute. Yes, students. The cost and management accounting, we are discussing the topic called cost versus expenditure. So what is meant by cost? So cost is nothing but then the value of sacrifices made. So what type of sacrifice we made? Maybe in terms of giving money or giving our goods or whatever it is that. So when we sacrifice some resources, why we are sacrificing resources? To acquire goods or services. Sir, when we acquire the goods or services, what we are going to get? We are going to get the benefits. Simple example, which I would like to inform you is that let us assume that I have purchased some 100 kgs of raw material. The cost of that 100 kgs of raw material, when you acquire this 100 kgs of raw material, you are getting some benefits. That total amount we call it as what? Cost. Out of this total 100 out of this total 100 kgs we may not consume on the same day. So when the items or when the goods or services are consumed, we term it as what? Expenditure. Let us assume that out of this 100 kgs, if I send 60 kgs to production process, that we are consuming to the extent of 60 kgs, that 60 kgs we call it as what? Expenditure, which will be shown under statement of profit and loss. The remaining 40 kgs which is lying in the organization, it is an asset because we have not yet utilized the concept or we are not yet consumed the benefits. The unutilized benefits we term it as what? We call it as asset, which is showing under balance sheet. Remember the two concepts. So the total cost which we paid to the supplier is the total cost. We have acquired total benefits. Out of this total benefits, we are consuming, because when you consume, you produce the goods and you can sell it to the customers. So when the revenue is coming, automatically your expenditure will also be shown. So whatever the benefits are consumed, we term it as what? Expenditure, which is showing under statement of profit and loss account. And whatever the unutilized benefits, that is to the extent of remaining 40 kgs we have not yet consumed, we are showing as an asset, which is showing under balance sheet like your closing stock. Is it clear about the cost versus expenditure? Any doubts regarding this? Any doubts regarding this? Can anyone text me? Nice. So this is the concept called cost versus expenditure. The same we can apply even to the asset also. For example, we have purchased some new machinery. The total, whatever the amount we have paid towards this fixed asset is then a cost to the organization. So when we acquire these fixed assets, why we purchase the fixed assets? To use it or to get the benefits from that fixed asset. So when you are consuming the machinery, automatically it will get depreciated. So when we utilize that, the depreciation is called nothing but an expenditure. The remaining book value, which is showing as a fixed asset under balance sheet, is called what? Asset. So that is where we need to understand that. So whenever the benefits are consumed, we are term it as a part of expenditure. When the benefits are not consumed, still lying, that means we can able to utilize in further future benefits, we term it as asset. So I wanted to conclude this concept called cost versus expenditure. Clear, students? Can anyone text me? Nice. Now we are moving into the second concept called costing. Sir, costing, if you wanted to understand, costing is simply a concept of two terms. Sir, always remember, those who are writing notes can also write down. Costing is defined as the technique and process of ascertaining cost. Simple understand the concept. Costing is nothing but then technique. Second one is process of ascertaining cost. I am renaming these two words like this. Technique I am called as techniques of costing, and the process of ascertaining cost I am terminating as methods of costing. Two terms I am keeping here. Please remember, costing is nothing but then a combination of techniques of costing and methods of costing. So the concept, if you see here, technique remains the same, and the process of ascertaining cost, this process of ascertaining cost, I am terminating as methods of costing. So costing is nothing but then techniques of costing and methods of costing. Let me explain what is this techniques of costing, what is our methods of costing. Based on these two, all our chapters are lying here. That means if you see many chapters like service costing, operation costing, for example, standard costing, marginal costing, all these concepts, all these chapters, job costing, unit costing, all these chapters is purely based on these two topics called techniques of costing. Second one is methods of costing. So don't assume costing is purely like casting. Casting means you just sum it up. That is not the concept called costing. Costing is the concept of combination of two terms. Like first one is techniques of costing, second one is methods of costing. Let me explain you what is the methods of costing and what is the techniques of costing. Sir, methods of costing is only to ascertain the cost. Let us assume, for example, you wanted to find out some cost of an object. Let us assume for a product, we are incurring material cost, we are incurring labor cost, we are incurring some expenditure. So simply additioning all these costs, this is nothing but then the methods of costing. So what process we applied? For example, let us take example of job costing. You are finding the cost of one job. Let us take an example of batch costing. You are just finding out the cost of one batch, like medicines, what they prepare in terms of batches. Let us assume we wanted to find out the cost of, let us assume we have hired a bus for some picnic or whatever it is that. The cost of that, whatever the cost of the travel, we call it as methods of costing. So when you are going further, you can understand what is the difference between these methods of costing and techniques of costing. For the time being, you just understand that methods of costing is just a process employed in the ascertainment of cost. How we find out the cost is nothing but the methods of costing. I repeat the sentence. How we find out the cost is nothing but than the methods of costing. Is it clear, students? Yes. So what you need to understand that you just remember these words. Methods of costing is nothing but then how we compute the cost, how we ascertain the cost. That is called concept called methods of costing. Now, what is the techniques of costing, sir? Sir, the techniques of costing, it just provides some structure, the format for decision making. Cost methods of costing is to understand how we get the cost amount, and techniques of costing, using that it is just providing some cost structure, cost estimate for the decision making. So that is a concept called methods of costing and techniques of costing. So when we do the chapters like marginal costing, when we do the chapters called standard costing, you can understand, or when you do the chapter called absorption costing, you can understand the definition of techniques of costing. So for the time being, don't understand, because it is a very difficult concept. Over a period of time, you can understand what is the difference between methods of costing and techniques of costing when we do the respective chapters. So for the time being, you understand this word. Methods of costing is just how we ascertain the cost. Techniques of costing is that, sir, it provides some cost estimate so that it can be useful for some decision making. That is the concept called methods of costing and techniques of costing. Let me explain you some examples with respect to methods of costing and techniques of costing. So all these techniques and methods of costing we are going to learn in this paper 3, cost and management accounting. Absorption costing, we have a separate chapter. Marginal costing, we have a separate chapter. Standard costing, we have a separate chapter. Uniform costing, we don't have a chapter, but I can explain you over a period of time. Direct costing, we use it in some of the chapters. Historical costing, we use it in some chapters. These are we called as techniques of costing. So what these do, sir, it gives you some format. By using that format, we take a decision making. Like in terms of marginal costing, we have a concept called sales minus variable cost is equal to contribution. In terms of absorption costing, we go as based on gross profit and net profit. So using those concepts, we used to use it for the decision making. That is the main objective of techniques of costing. Now, what is the methods of costing, sir? How we find out? Let us assume, take an example of job costing. Finding out the cost of a job is nothing but then job costing. Batch costing. Finding out the cost of a batch is called batch costing. Let us, I can give you a simple example of job costing. Sir, if we have vehicles, we take it for service to for example, a vehicle showroom. In terms of this vehicle showroom, when we go when we go to the vehicle showroom, when we ask for the repairs, he will bring the job card. That means he keeps all the cost of a particular job. That is we call as job costing. In terms of batch costing, take an example of medicines. It we cannot be provided in single. Medicines are produced in terms of batch wise. The cost of each that we call as batch costing. Take an example of contract costing. So contract, for example, we wanted to build some flats or whatever is that. Cost of that we are called as contract costing. Unit costing is more like finding out the cost of a unit. Process costing, for example, a product is supposed it not completed in one time, sir. It will be taken one to two or three or four process. Take an example of, let us assume, in terms of some raw materials. Sir, let us take an example of pipes. Sir, pipes cannot be produced at a single stage. Pipes first they need to keep some PVC, then it is supposed to be keep in missions, then again it is to be dried. So there is some process will be there. Finding out that cost of process we call as what, process costing. Let us next a concept called operation costing. Sir, operation costing is used for, sorry, it is operating costing, operating costing is mainly used for service industries. Let us assume I am running a hospital. What is my cost of what I can assume, what is the cost of for each patient? Finding out that cost is called operating costing. Or take an example of like passengers, like you are hiring some buses and use it for passenger travel. What is the cost of that? So finding out all those costs is nothing but then operating costing. The next concept we have is multiple costing. So multiple costing is not a separate method of costing. That means if in an industry, if you are using more than one method of costing, we call as what, multiple costing. Let us assume in car industry, we may use process costing with operating costing. That means when we employed more than one method of costing in one industry, we call it as what? Multiple costing. Let me recap the concepts of techniques of costing and methods of costing. So techniques of costing is mainly used for decision making purpose. It provides some cost structure estimate the format to for the decision making. Those are the examples: absorption, marginal, standard, all these. In terms of methods of costing, it makes you to ascertain the cost, like job costing, job cost of a batch costing, cost of a contract costing, cost of a unit costing, cost of a process costing, cost of service industries we call as operating costing. Operation costing is different, we'll discuss in terms of process costing. Then last concept is not a method of costing, that is a multiple costing. When we use more than one method of costing, we call it as what? Multiple costing. Is it clear about techniques of costing and methods of costing? Can anyone respond to me in chat, or anyone is having any doubt regarding with this? Nice. Okay. Now let us move to a next concept, elements of costing. So this is where, sir, if you see all our 15 chapters, it it may be either the chapters of elements of costing, or methods of costing, or techniques of costing. Three concepts. Clear? I'm repeating again. All our 15 chapters, excluding the introduction, if you remove it, the chapter would be either of elements of costing, like we have a material cost chapter, labor cost chapter, overheads chapter, or it could be of methods of costing, like job costing chapter, like contract costing chapter, or process costing chapter, like this. The third is either it could be of techniques of costing, like marginal costing, standard costing, budgets, all these come. So we are focusing our CA intermediate syllabus on three levels. First one is elements of costing. Second one is about methods of costing. Third one is about techniques of costing. Remember three. You can also write down. I'm repeating again. All our chapters, either it could be of elements of costing, or methods of costing, or techniques of costing. Is it clear? Anyone can respond me in chat? So all our chapters, I'm repeating again for the freshers also, it could be either of elements of costing, methods of costing, or techniques of costing. So what are the elements of cost which I can keep it as a part of my cost? So the elements of costing basically divides into three categories. First category is material, second category is labor, third category is expense. So anything other than material and labor cost is expense. Even in terms of each item, I'm repeating, if anyone asks you what are the elements of costing, the simple answer is, sir, material, labor, expenditure. I repeat the word material, labor, expenditure. Those who want, they can write down. The elements of costing is simply three terms. First term is material, second term is labor, third term is expenditure. Many people confuse like this. Sir, elements of costing is material, labor, and overheads. Absolutely wrong. The elements of costing are three. First one is material cost, second one is labor cost, third one is expenditure cost. Clear in this regard? Clear in this regard, Priyanka? So the elements of costing will be having material, labor, and expenditure. So in terms of material, labor, and expenditure, I'm again bifurcating into two categories. One is direct, second one is indirect. Let us assume like direct material, indirect material, direct labor, indirect labor, direct expense, indirect expense. Let me give you a simple example for all these things. So what is direct material? Let us assume that anything is which is involved directly into the production process. That means without that material, if I don't get product, That is we call as direct material. Let us assume for a take an example for chair. The wood is the direct material for that. Now, what would be the indirect material there? Sir, for example, for missionaries, you may use some tools and consumables, some repairs, nuts, bolts. Those are also material, but that is not directly used in the production process, or we don't get product from that. It will be used as supplementary. Those we called as indirect material. So if you first, I'm categorized into three categories: material, labor, expenditure. Again, I'm categorized into six categories: direct material, indirect material, direct labor, indirect labor, direct expense, indirect expense. Clear in this regard? So first I'm moving into three categories. Next again I'm moving into six categories. First one, all the elements of costing. Sir, it could be either of material, labor and expenditure. Again I'm moving into material. I'm classifying into direct material, indirect material, direct labor, direct expense, indirect expenditure. Let me give you an example of direct labor. Those who works in terms of factories, those who are directly involved in the production process, we term it as direct labor. Now, who can be indirect labor, sir? All our administrative staff, all our account staff, all our, let us assume, security people, those who are coming under as what? Indirect labor. Take an example of an accounts manager. Accounts manager will not go to the factory and produce a product. He will be used as he will be contributing in a different way. That means he is not involved directly in the production process. That is what we called him as what? Indirect labor. Take an example of security guards. Will security guards will go and do the production process? Obviously no. So they will be used, they'll be termed as what? Indirect labor. Next one is direct expenditure, indirect expenditure. Let us assume to produce a product, if I am incurring, let us assume I am let us assume that one separate mission is supposed to be procured, or one separate engineer I need to procure for one production process. You will be used directly only to that particular product, we called as direct expenditure. Sir, for example, if you are not using directly, we may term it as what? Indirect expenditure. So the basic concepts are six terms: direct material, indirect material, direct labor, indirect labor, direct expenditure, indirect expenditure. Now again I'm moving into further. So all these indirect material, remember this very important concept, all this indirect material, indirect labor, indirect expenditure, we term it as overheads. Overheads. I'll repeat this word. So out of these six, what are these six? Direct material, indirect material, direct labor, indirect labor, direct expenditure, indirect expenditure. Out of these six, I'm moving all the direct expenditure to separate part. That is direct material, direct labor, direct expenditure. I'm not terming any name. Those are called directly. But all this indirect material, indirect labor, indirect expenditure, I am putting a name called overheads. This is important concept. Indirect material, indirect labor, indirect expenditure, we call it as overheads. I'll write down here. Indirect material plus indirect labor plus indirect expenditure, we called as overheads. My dear students, are you able to see my screen? Are you able to see the screen? Indirect material, indirect labor, indirect expenditure, I am terminating as overheads. Hope you are also writing the inner notes. Nice. So let me recap here. Because if you understand the basics, these cannot be repeated again and again, because over a period of time, over a period of chapters, we go directly, I call it as overheads. When I say overheads, you need to understand it can be a combination of, or it can be either of indirect material, indirect labor, indirect expenditure. Sir, why? Okay, let me complete this part and again I'll come back to overheads chapter. So first, now 6 terms: direct material, direct labor, indirect labor, direct expenditure, indirect expenditure. If I'm stressing out, means you need to understand the importance. The indirect material, the indirect labor, the indirect expenditure, we term it as what? Overheads. Now, someone text me in chat. Okay, what I'm writing on screen, you are not visible. Okay, that means I need to share the screen here. Now, are you able to see my new screen? Nice. So this is what I'm keeping: indirect material, indirect labor, and indirect expenditure. I'm terminating as overheads. Good students. Let me move forward. So another class bench, all these indirect expenditures, all these overheads, what I mean, I will not call it as indirect material, indirect labor, and indirect expenditure. Now I am putting a name called overheads. These overheads can be incurred at the factory level, like your security guards, your tools and consumables, all these things. These overheads can be incurred at even at the office level, your rents. Okay, your, for example, a security guards, your at your administrative office, your accounting, all these we called as office overheads. Third one is selling and distribution overheads. Selling and distribution, all your marketing overheads. That means all the overheads, again I am classifying into either it could be of factory overheads, office overheads, and selling and distribution overheads. This screen is visible, right? Factory overheads, office and administrative overheads, selling and distribution overheads. Right. So the indirect material, indirect labor, and indirect expenditure, I am terming it as overheads. And again, these overheads, I'm classifying into factory overheads, office and administrative overheads, and selling and distribution overheads. Now, sir, why this costing is useful? Let me tell you one more point and we can move forward to the costing terms. Sir, these days of business, sir, I need to get a profit. Profit is simply sales minus cost, total cost. It could be of material cost, labor cost, direct expenditure, or overheads. Now, what is my objective? My objective is to earn a profit. Now, these days, selling price is not under the control of the managements. Why is it? Let us assume I have introduced a product called, let us assume I'm taking an example of this mouse. So, for example, a new beginner, let us assume that this is a Lenovo company. They have manufactured it. They have incurred some cost. Earlier days, what they do, they incur total cost, put some margin of profit, then they used to sell it to the customers. Now, when the competition begins, I repeat the word, when the competition begins, what happens? The players, so those who understand that this product is very good, this product is marketable, this product has a long standing, we can get margins. What the people do? They try to copy it. Now, for example, when this Lenovo people, if they are first, what they do, they calculate the total cost, they add some profit of margin, then they will sell it to the customers. So they are assured about profit. I repeat the word. They are assured about profit in the olden days only when the monopolies or monopoly competition markets are existing. Now these days, those monopolies are not there. Very in few industries we can see the monopolies or more or less are competition markets. Let us assume when someone knows that, so this product is having good market, they try to copy it. And obviously they wanted to sell at the lesser price than the existing market. Now, when other player, let us assume Dell has come, this is costing, let us assume Lenovo is selling at 1000. The Dell started to sell it only at 800 because technology increases and they are not investing in research and development because they are already copying the Lenovo market. Assume it. Now, when the competitor is selling the same product with the same features at 800 rupees, even the Lenovo is supposed to reduce its price. So what if I don't reduce the price? The market will go out. Yesterday I discussed a concept called Geo. Sir, when the Geo has come into the market, earlier this Airtel, Vodafone, Idea, they used to charge at different prices. When the competition begins and when the competition is selling at the lesser price, when you observe those days, Airtel has reduced the prices, has given offers, Vodafone has reduced the prices, and even the other market players like Idea also they have reduced the prices. Why, sir? If I don't reduce the prices, I'll be going out of the market. Nobody will come to me. So that is the reason when the competition comes, now let us assume when the Delhi is selling at 800, to survive in the market, I need to sell even at lesser than that or even at the same price. Now, can you tell me now whether the what I can say, whether the business have controls on the selling prices? Mostly no, because we are going by concept called competition. Now, what is the control? The organizations have control only on the cost. They can only reduce the cost to get the profit because selling prices is fixed by the market players based on the competitions. And what organizations can control, because to get the profit is a combination of sales minus cost. I repeat the word, sales minus total cost is profit or loss. Now to get the more amount of profit, to get more amount of returns on my investment, sales I don't have much control. I can control only in terms of what am a cost. That's the reason many organizations try to control the cost. That is the reason they use all these concepts called what am a costing methods, cost techniques. So let us assume, for example, we are taking a class. I'm charging somewhere about 3 to 4,000. Let us assume that. So for some industries, this what I get, quality is also important. Let us assume I wanted to start an institute or some college or whatever it is that selling price I need to go, whatever the fees I need to charge, I'll go by based on my other competitors existing in that market, maybe plus 10% or minus 10%. So only to get the profit, I need to control on my cost. What is my cost? So can I save some amount in different types? That is the reason all the organizations are more focused on the cost control and cost reduction. The main objective of costing is two terms called cost control and cost reduction. I'm keeping a new word now, cost control and cost reduction. Why we need to control the cost and why need to get the cost reduction? Sir, those days are over, sir, where we can keep our prices. Now the prices are not fixed by the management. This is going by the this is going by the market. So only to get more amount of profit, I can control only my cost, or I can control my cost. That is we call as cost control and cost reduction. The ultimate objective of costing is objectives of costing is nothing but than cost control and cost reduction. Repeat here. I'll write down here. Are you able to see the screen, Amma? Why? Some issue. It's getting a little slow. I'll write down here. Objectives of costing. First one is cost control. Second one is cost reduction. The detailed we'll discuss later. For the time being, understand what is the objectives of costing. Objectives of costing is cost control and cost reduction. So don't get confusion about what is costing and what is objectives of objectives of costing. Costing is sorry, Amma. Costing is techniques of costing and methods of costing. That is costing. What is these two? It's a cost, it's the objectives of costing. Why we are implementing costing techniques or why we are doing these costing methods only for the two purpose. One is cost control, second one is what, Amma? Cost reduction. Is it clear? Can anyone respond to me here? Understood what is techniques of costing, what is methods of costing. Second concept is what is the objectives of costing. Objectives of costing are cost control. What is next one, Amma? Cost reduction. Right. Now we are going to very important topic called responsibility centers. Is everyone is listening? Can anyone text me? Right. So what is this responsibility centers? My total organization, very important. My total organization, I'm dividing under 4 categories. Those we called as responsibility centers. What is those 4 responsibility centers, sir? Cost center, revenue center, profit center, investment center. Remember these four topics. Cost center I will be using many times because in every chapter, like overheads, we use the concepts called cost center. So you need to understand what are these responsibility centers. So there are 4 responsibility centers. First one is cost center, second one is revenue center, third one is profit center, fourth one is investment centers. So in terms of costing, by understanding the name itself, we can understand what is the meaning. Responsibility centers. That means I am putting responsibility for each center. Cost center, I'll be called as one responsibility center. Revenue center, I'll be terming as one responsibility center. Profit center and investment center. For each center, I'll put one head. He is responsible. Take an example. I'll tell you in brief all these 4 concepts, then we'll understand one by one each topic wise. Cost center. Sir, wherever we are incurring cost, like in terms of production, let's take an example of production process. Let us assume there is a director production. What he will do, he is responsible only for the cost. So yeah, I'm keeping his as a responsibility. Second one is revenue center. So this center will generate only revenue, like your sales outlets. Sales outlets, they do not incur any cost in terms of production. What is their responsibility? They just generate the revenue. They are responsible only for generation of revenue. Third one is profit center. Profit center will have cost centers and revenue centers because profit will come out of revenue minus cost center. So profit center is responsible for profit. Fourth one is investment center. When I'm having surplus funds, how I will do investment? All these treasury management operations are coming under investment centers. Are you clear about these 4 topics? General topics. What the four responsibility centers? Cost centers, revenue centers, profit center, investment center. Cost center, there the responsible person is responsible for the incurrings of cost. I will evaluate himself. When I keep a responsibility, I will evaluate him. For a revenue center, let us assume the director of marketing is responsible, so I will also evaluate him in terms of revenue center. Third one is a little header than cost center and revenue center. So this person is responsible for generating of revenue, that is we call as profit center. Fourth one, investment center. Out of the surplus funds, how I am investing, that is a concept called investment center. Now understand each topic very carefully. How I do evaluation, sir? Cost center. Sir, I'll tell him to incur this much of cost. How much he has incurred? I repeat the word. I'll write down in the notes somewhere. Cost center, revenue center, profit center. But this all there will be in the in our material. No need just to understand the concepts here. Now, what is this basically a cost center? Meaning, I'll tell you later, but how I do evaluation, why I'm keeping as responsibility. Let us assume person A is responsible for cost center, person B is responsible for revenue center, person C is responsible for profit center, person D is responsible for investment center. Now, in terms of this cost center, what responsibility I'll keep him? I'll tell him to spend all the production of, let us assume, I gave him an order of 1,000 units. I said that you should finish all this cost in terms of 10,000 rupees. I given him one standard. Sir, 10,000 rupees you need to spend. How much he spent? Let us assume he has spent 9,000. This is called actual cost. What is this 10,000? I'm terming as standard cost. Remember the word standard cost. That means I gave him a standard. Sir, based on the information available in the market or whatever is our past experiences, all these, let us assume 1,000 units, these 1,000 units, you need to finish the production in 10,000, but he completed in 9,000. He is more efficient. Or he may complete in 11,000 also. Then he is not efficient. That means what is my evaluation in terms of cost center? What is my standard cost will be compared with my actual cost. Then I understand that whether he is doing good or not. That is a concept, that is the evaluation of cost center. Next, I'm putting a concept called revenue center. I told person B, whatever Mr. A has produced those 1,000 units, you need to sell it for 12,000 rupees. This is we call as budget revenue. What I call as budget revenue. So I should get a revenue of 12,000. Now let us assume B has sold for 13,000. This 13,000 we called as what? Actual revenue. That means I gave him a target of 12,000, but he has but he has sold for 13,000, he is doing little good. Or if he sell at 11,000, that means he is not doing good. So I will evaluate his responsibility. Now profit center, I have given a target of 2,000. How we got this 2,000? Sir, this profit center head is responsible both for cost center and revenue center. For revenue center, I have given a target of 12,000. For cost center, he has given a response. He has given a. I have given a target of 10,000, so that he should earn a profit of how much amount? 2,000. Now, what is this? Is we called as budget profit. What we call as a budget profit. Then what is my actual profit? Let us assume that if the B has sold for 13,000 and A has produced at 9,000, what is my profit? My profit is how much amount? 4,000. How you got this 4,000? 13,000 minus 9,000. So I can evaluate the profit center C's performance. I have given a target of 2,000, but he has made a profit of how much amount? 4,000. It is positive. Let us assume, coming to the evaluation of investment center. Sir, this is based on return on investment. I gave him 10,000 rupees and asked him to get 12% rate of return. That means you should get how much amount? 1,200 rupees. This is we called as budget return on investment. Budget return on investment. Now, for example, he has made good investment and I got actual return of investment as 13%. So I have given a target of 12%, and he has given me a actual return on investment to the extent of how much amount? 13%. So I'll repeat these four words again. I'm not discussing on what is meaning of cost center, what is meaning of revenue center, what is meaning of profit center, what is the meaning of investment center. What I am explaining is here is simply, now, what I'm explaining is simply how we evaluate the responsibility centers, because I've given a responsibility. Now, in terms of cost center, I'm comparing my actual cost with the standard cost. Remember this word. In terms of cost center, my evaluation is basically here. I'm comparing my actual cost with standard cost. In terms of revenue center, I'm comparing my actual revenue with what? Budget revenue. In terms of profit center, I'm comparing my actual profit with my budgeted profit. Budgeted profit, if you remember here, we will be using in standard costing also. Budgeted profit is nothing but than budgeted revenue minus standard cost. I repeat the word. Budgeted profit is nothing but than budgeted revenue minus standard cost. In terms of actual profit is nothing but than actual revenue minus actual cost. So these two terms we use it in terms of standard costing in CA final level, may not be applicable in the CA inter level. I'm repeating these terms again. Budget profit is equal to, how we got this 2,000 number? This 2,000 we got after reducing the budget revenue of 12,000 with what? Actual standard cost of 10,000. I have given a target of getting 2,000 rupees profit, whereas he has got a profit of 4,000. How we got this 4,000? When his actual revenue is 13,000 and when the actual cost is how much amount? 9,000. So comparison of profit center is nothing but then comparing the budget profit with what actual profit. Fourth one is investment center. Sir, what I'm expecting from investment? I expect a rate of return on investment. How much I have given a target, which is called 12%. 12% we called as budget return on investment. Whereas if I got more than that, that is we called as actual return on investment, which is 13%. My comparison is here, simply with my comparison is comparing my budget return on investment with what actual return on investment. So what is the comparison for cost center? Can you term yourself? The cost center is nothing but then comparison of cost center is with the actual cost comparison with what standard cost. Actual cost comparing with the standard cost. What is the evaluation of revenue center? The comparison of actual revenue with the budget revenue. When it comes to profit center, the evaluation is based on budget profit with what? Actual profit. What is the evaluation of investment center? Comparing my budget return on investment with what actual return on investment. Is it clear with this? Now, let me explain what is a cost center. Very beautiful concept. I'll give you with a very good example. Please, next for 15 minutes, understand the concepts called cost center. Please, all of you mute yourself. I'm getting some disturbance. Now, sir, why we need this cost center? I already told I work with BPCL. Is everyone is clear? Are you able to hear my voice? Can anyone respond me?
Sir.
Right. Okay. I worked with BPCL. Let us assume that. So BPCL has 15,000 retail outlets. We see all the petrol bunks, across the roads, sideways of roads in different parts of the India. It has issued 15,000 retail outlets issue. I'm telling also the difference between financial accounting and cost accounting also. The use of integration of cost accounts in the financial accounts. That we have a separate chapter called cost accounting system also we have. There also we can discuss this. Let us assume that I'm having 15,000 retail outlets where they sell diesel, petrol, all these things. They also have, I repeat, they also have LPG centers. We have a Bharat Gas. We have a Bharat Gas. Let us assume there are some 4,000 Bharat Gas dealers are available across India. Understand the concepts. Third, they also have lubricants. The MAC lubricants belongs to the BPCL group only. They'll be selling at different dealers and agents across India. They also have the aviation stations where they pump aviation fuel in the airports. Majority of airports, they also have the aviation stations. They also have two refineries, one at Bombay, one at Kochi. I'm telling you different types of business within the same company. They also have a gas, not LPG, another gas concept. So they also have gas business. Natural gas or water gas stations. Okay, so they also have administrative offices. Now, see it. Take an example of this retail outlets. Sir, I wanted to know, I repeat the word, I wanted to know the repairs and maintenance cost in the retail outlets. The financial accounting will tell you how much cost incurred in a total. Otherwise, you may ask a doubt, sir, why can't we keep a separate ledger for each outlet for repairs and maintenance? The volume. That means for repairs and maintenance, I need to keep 15,000 ledgers in my financial accounts. If I wanted to track each and cost of repairs and maintenance across the retail outlet. 15,000 ledgers are there. You need to create all the 15,000 ledgers. Second, I will be incurring electricity cost across all the retail outlets. Then tell me how many ledgers I need to keep again in the financial accounting. 15,000 ledgers for what? 15,000 ledgers only for what? Electricity. I need to enter electricity cost of BPCL outlet at Visakhapatnam. Visakhapatnam again, Dwarka Nagar, again steel plant, again different concepts. How many ledgers I need to keep? 15,000. Now tell me, for a simple business, not like a BPCL, how many ledgers we need to create? At least some 100 ledgers. At least 100 ledgers. Now for 100 ledgers in a group wise. Now 100 ledgers into 15,000 retail outlets. So 15,000 into 100. I'm telling you a very simple understanding. 15,000 into 100. How much amount I'm getting? 15 lakhs ledgers. 15 lakhs ledgers, right?
Yes, sir.
So 15 lakhs ledgers I need to keep only for one business within the BPCL. That business is what? A simply retail outlet business. Understood? Now, if I take same concept for 15,000 ledgers, you need to create, you need to maintain. You know how much difficult to close the trial balance and prepare the financial statements. Now we have got ERP, but think about 15,000 ledgers. Even our Excel sheet, we have 64,000. I think 64,000 only. What I can say, rows. Now think about LPG station. LPG station also I'll incur cost at least of 100 types, at least 100 types, 100 into 4,000 ledgers. How many? 100 into 4,000 ledgers. Again, I got some about 4 lakh ledgers. 15 plus 4 lakh, not 20, 15 plus 4 lakh, how much? 19 lakh ledgers. Can I keep all these ledgers and maintain my books of accounts? Can anyone respond to me? Can I keep those many of ledgers in my books and maintain those systems? Not possible. That's the reason we integrate, I repeat the word, we integrate the cost accounting system with the financial accounting system, and we maintain properly, and we get the cost of each one. What we do here, now here we use a concept called watermark cost centers. Now what is this concept of cost center? First, to understand the meaning of this cost centers, cost center is defined by SEMA. SEMA is Chartered Institute of Management Accounts. Majority of the costing decisions are taken by, or we are going to take from the SEMA London, as location, person, or item of equipment, or group of all these things for which cost may be ascertained and used for the purpose of control. I repeat the word, very, very important definition in terms of costing, because after qualifying CA Inter or after qualifying CA final also, they don't understand the concepts of cost center, because once you clear this CAs, when you go into organizations, you need to understand these concepts in very depth to make your job very easy. So that is the reason I'm focusing more on the basic terms. So doing problems is very easy. We can do it. Once the problem is there, right answer, over, without knowing meaning. So what I'm telling here is that cost center is how we are defining it. It can be a location, that is a retail outlet, or it can be a person. Maybe you may not aware about listing agreements. What are the listed companies? The listed companies, whatever amount we paid for directors, individually we need to disclose it. Now I'll keep one cost center for one person, for CMD or director finance, director marketing, whatever it is that. So it can be a person, or it can be an item of equipment. Let us assume I'm having 10,000 units of machinery. I wanted to trace the cost incurred for each machinery. It can be of repairs, it can be of indirect labor, it can be of tools, it can be of lubricants, whatever it is that. It can be an item of equipment or group of these. It can be a combination of all these three, for which cost may be ascertained. We'll find out the cost of that. And once we find out that cost, we don't keep it for in our separate books. What we do, using that cost, we use it for our purpose of controlling. What controlling will do? Cost control. Because the objectives of costing, earlier we have discussed, the objectives of costing is purely two concepts. First one is cost control. What is second one? Cost reduction. For cost control, the important topic is cost center. I repeat the word. For cost control, the important topic is what, among cost? Important topic is what? Cost center. Now remember this word. So tomorrow, maybe today we will not have time to discuss in detail. The BPSL example I will take again. I'll make you to understand the cost center. Now understand what is meant by cost center, where we anchor the cost. Sir, it can be a location. As I said, like a retail outlet in Dwarkanagar, retail outlet in Abits, retail outlet in Kokatpalli, whatever is it. It can be a location, person, or an item of equipment which we use in our which we use in our factories, or group of these. So what we are going to do with these three types? It can be location, person, or item of equipment. What we are going to do? We will be ascertaining the cost. We'll understand what is the cost incurred there. And what we do, we use it for the purpose of what, among cost control. Let us take, when we maintain these cost centers, I will tell you tomorrow how we maintain these cost centers, but understand here. For example, when we maintain these cost centers, I'll create a separate cost centers for one retail outlet in Dwarkanagar, one retail outlet in steel plant, one retail outlet in MEP colony, one retail outlet in some other X place. What I'll do after maintaining this cost center, let us assume repairs and maintenance. I am taking an example. I'll be comparing the repairs and maintenance costs incurred at Dwarkanagar, at MEP, at other place, and I can understand why we incurring more amount here, why we incurring less amount here. Is it possible in terms of financial accounting, sir? The organization is very, very less. We can create the ledgers and we can maintain. But when the organization is very bigger or little of medium size and more, we cannot create those many ledgers in our financial accounts and comparison. For that purpose, we use a concept called cost centers. Once we define the cost centers,
After defining the cost center, what we do, we ascertain how much cost we have incurred there, and after incurring that, after recording that, or after ascertaining that cost, what we do is we do the cost control. We will be comparing what with one outlet to another outlet, or with one mission to another mission, or with one person to another person. Clear with this regard with cost center? How we maintain, how we keep in our financial accounts is separate topic. You keep it some other place. For the time being, understand what is meant by cost center. What is meant by cost center is simply, sir, I will be defining a person or an item of equipment or a location as one cost center. I'll incurring cost, I'll be incurring that cost. After incurring that cost, what I will do is that I will be using that cost center for cost control. Ultimate object of costing is what? Cost control and cost reduction. For cost control, the ultimate objective is I can do it by using a concept called watermark cost centers. One more topic I'll introduce now and I'll close it. These cost centers are divided into production cost centers and service cost centers. I'll repeat the word. These cost centers are divided into production cost centers and service cost centers. What is that? What is that? We can understand later. Now I don't want to discuss more here. Now simple understanding, cost center are classified into production cost centers and service cost centers. Clear? Sir, how we do in our financial accounts, I'll be explaining further with a detailed example. Don't worry about that. For the time being, understand that responsibility centers are four, sir. One is cost center, revenue center, uh, profit center. Fourth one is investment center. Out of that, we are discussing about a concept called cost center. What we do cost center, which can be a cost center, sir. Location can be a cost center, a person can be a cost center, a item of equipment can be a cost center, a group of these can also be a cost centers. What we do, we will be trying to ascertain the cost. Ascertain means we try to find out the cost of that, and by using that cost center, I'll be doing a analysis of my, I'll be using it for my cost control, because ultimate object of costing is cost control. What is next one? Cost reduction. And again, the cost centers are divided into production cost centers and service cost centers.
So what we discussed today, I'll recap. So today we have discussed the concept of cost versus expenditure. Cost is total benefits. When the benefits are consumed, we term it as expenditure. When the benefits are not consumed, it is we called as asset. Next one. Next, we have discussed the concept called costing. Costing is it is a combination of methods of costing and techniques of costing. Methods of costing is the process employed to ascertain the cost, how much you have incurred the cost, like job costing, batch costing, contract costing, etc. The technique of costing, it provides a cost estimate, structure of cost estimate for decision making purpose, like marginal costing, standard costing, and all these things we will be terming as a part of costing. Then we have discussed topic of what the objectives of costing, cost control, and cost reduction. Then we have discussed the concepts of responsibility centers. Responsibility centers are four categories: cost centers, revenue center, profit center, and the investment center. The evaluation of cost center is comparing the standard cost with the actual cost. The revenue center is comparison of the budget revenue with the actual revenue. Profit center is budget profit with the actual profit. Investment center comparing my budget rate of return on investment with the actual return on investment. Then we a little move forward with the cost center. Cost center, just I have not given you full example, I'll be discussing tomorrow. The cost center is simply, it can be a location, a place of item of equipment, or a place or a person for which cost we ascertain and we use it for the cost control.